Welcome to Markets Now. I'm Michelle Rook with Darren Newsom, Senior Market Analyst with Barchart. We're seeing some mixed trade in grain and livestock futures this morning. And Darren, I guess let's talk first of all about the grain trade. Wheat market, it's kind of the price leader to the plus side. So let's talk about that one first. Is that just short covering, or is that market following this European market, which has been tacking on some higher closes?
It could be a combination of both, Michelle. I'm not really reading a lot of fundamental change to the market right now. So, I mean, if the European market is providing support, it's going to be light. I think the bulk of this is probably coming from non-commercial short covering basically on the simple fact funds are getting bored with this market. I mean, the news in wheat just doesn't change. Fundamentally, the U.S. market is bearish. It's been bearish for as far back as I can remember. We've got spring wheat harvest going along. We've got basis in all three of these markets. Hardwood winter, softwood winter, and hard red spring are weak compared to their previous 5 years. So there's just nothing to get excited about. And with so many other outside markets, particularly over in the energy sector, starting to show some life, it wouldn't surprise me if money just starts coming out, meaning short positions are covered, and moving over into something a bit more active, something a bit more interesting, like energies.
Yeah. And they kind of go, the funds that is, they kind of pick at things that are undervalued or at least, like you say, have some decent price movement, right?
Correct. They're looking for activity because low volatility markets just don't do much for them. And so one of the things we'll talk about is when funds start to move money around, and this is an opportune time. We've got Goldman roll and everything else going on September in the September contract. So if they're getting out of some markets and they're looking for others to go to, one of the first things they look for is markets or market sectors with bullish fundamentals, and we can tell that by future spreads. And so, they're going to look over at energies. They're going to look over at maybe some of the oil seeds. They're going to look over at some other markets. Okay, we've got strong carry in the wheat subsector, all three markets. There's nothing interesting about that. There's nothing for them to do. So they're going to look for other markets that may have a bit more life going over the next quarter or so.
Okay. Well, certainly we haven't seen evidence yet in the row crop sector anyways that they're going to cover shorts over there, except for some like 1 or 2 day pops with money flow, like when we had the stock market sell off earlier this week. Is this kind of what you're seeing that's typical of just a big crop? We just kind of keep leaking lower?
Yeah, it is. From week to week, if we watch these spreads from week to week, we can see that they're covering more calculated full commercial carry. So in other words, the commercial side's growing more comfortable with what the new crop supply and demand situation is. It doesn't tell us anything about yield. We don't need to know, what yield guesses are or overall production guesses are. But what we can read, what we do need to know is that the commercial side is getting more comfortable with overall supply and demand. And if we look at how December is losing ground to March, May, July, and so on, it tells us production's getting larger. And so this all seems to fit seasonally. We've still got time, I believe, a couple months before the market tends to bottom out. So, the decent corn and November soybeans. So, time and space is not on the side of the markets right now. It certainly looks like, there's just no reason, again, with harvest just coming on, for funds to get overly excited about, having to get out of their short futures positions and probably be adding to them here over the coming months.
So technically, December corn, last week we took $4 out. We closed back above it. That's going to be pretty pivotal here, key for Friday, isn't it?
I think so. A couple of reasons why. Number one, round number reliance. Corn likes round numbers. And $4, is a big round number. So if it takes that out, then we're probably destined for 390 and then maybe 380 and so on, until it starts to uncover that buying interest. And also, if we go back to this past February and look at the U.S. government insurance spring base price, and we take 85%, I think it was like 467. That comes right in around 395 to $4. So you would think we have a synthetic floor here at this point where it just doesn't pay on the commercial side to push the market below. So sometimes that provides support. So far, it's a little bit dicey. We'll see how we close out, how we finish today, and as we move into next week with weather being the key driver.
Yeah, and weather's a key driver in the soybeans as well. And obviously that looks fairly bearish, but for next week anyways, but we did get some export business that was finally confirmed here this morning. The spreads have been kind of telling us that we were going to see that business, right?
Yeah, there's been a number of mornings here this week where we've seen some overnight trade where the nearby contracts kind of made gains against the deferreds. And then as the day wore on, it kind of eroded away. But this told us, that there was some overseas business being done, possibly over into the Eastern Hemisphere. Certainly looks like some of it was done. So, our new crop export sales, based on the last weekly export sales and shipments, aren't anything great. But we are starting to see some sales made each week, which again isn't overly surprising. We've got the national cash index down well below 990, actually $10 at this point, and dropping almost a dime a day. So that's going to attract some actual cash buyers. Not a lot, but enough to just kind of say it covers some secondary needs.
Yeah, and to your point, I think new crop exports for soybeans are down like 56% versus last year. So certainly that gives the bears a little bit more ammunition. Do you think that the November soybean contract is going to be able to hold $10 with what we just talked about and the fact that you're still looking at a big crop?
Probably not. I think it closed Thursday somewhere around 10:07, 10:08. So I think it could, depending on how Friday plays out, it could really test that big round number here as we close out this week, and looking ahead to next week. Unless something changes weather-wise, unless we start to see a more dramatic move, say above normal temps and below normal precipitation for most of the Midwest and in parts of the plains, it's going to be hard for November soybeans just because it's a $10 number to hold above that level. My guess would be it's probably going to work below until we get some sort of reason for either the commercial or non-commercial traders to step back in and start buying.
No doubt. And I don't see a reason on the horizon that would be unless it's something black swan, geopolitical, something like that, right?
Yeah, and as far as the politics of the situation go, I don't see that changing anytime soon. We know the U.S. has become, again, a secondary player. Brazil basically basically takes care of China's immediate needs. And then again, China, unknown destinations, and so on are basically just picking up some blue light specials on the U.S. supplies whenever they just, again, need to top off what they're getting elsewhere.
No doubt. And we blamed a lot of the pressure in the wheat, corn, soybean market, whatever it might be in the grains on technical selling, fund selling. But there's been a lot of farmer selling too, hasn't there?
I would say so. If we look at where the cash indexes were at the end of July, it told us available stocks to use had really ballooned over the course of last month. So that indicates that there had been a lot of grain moved to town. Now we had wheat harvest, winter wheat harvest going on in July. We got spring wheat harvest going on here in August. I have a hard time believing there was a lot of soybeans in store that came to town. There was probably some, but I think the bulk of what we saw moving to town was probably on the corn side. And again, we could see this with basis weakening a little bit late in July and continuing that weakness, continuing to see that slide here in early August.
Cattle market is trying to recover here this morning, and we've had a big sell-off here, a correction, kind of in tandem with the stock market, although it was interesting yesterday that the stock market had a big rally and cattle market was still down. So what do you see ahead for this market? Are we going to be able to heal or recover?
I think it's going to be a real test. Again, there is a tie between particularly the live cattle market and the U.S. stock indexes. And, as I wrote about once this week, there seems to be a change in attitude towards stocks at this point. It's gone from buying the dips to selling the rallies. And so, Thursday's, as you mentioned, sharp gains or solid gains was met with a little bit of selling. We'll see how Friday plays out. And this could have ripple effects over into the live cattle market. Now, what has stood out to me, even with Monday's washout out in the livestock sector, we saw solid commercial buying in both live cattle and not quite as much, but similar in feeder cattle. And as the weeks progressed, the live cattle market, the commercial side of the live cattle market, stayed solidly behind this market, solidly behind these contracts. We can see this starting with October moving out. And yes, the August is kind of a proxy cash contract at this point, but we can certainly see that in the spreads, October, Dec, Feb, and so on. So as long as that continues, that gives market bulls at least a sliver of hope that this market can stabilize.
Yeah, we beat up the charts pretty good, so we'll see if the cattle market can heal from this or not. All right, thanks for joining us, Darren Newsom, Senior Market Analyst with Barchart. This is Markets Now.